Welcome back to the channel. I hope you're having a powerful and productive day. Today's episode is extremely important because the crypto market is once again sending mixed signals, and if you're not paying attention, you could easily get shaken out of your position before the real move even begins. As we move deeper into the week, the majority of the market is glowing green. Many coins are up anywhere from 5 to even 10% in just a short window of time. Everything looks optimistic on the surface. But when we zoom in on one specific project, Monad, we start to notice that it's not exactly following the crowd. While most coins are pumping, Monad is moving much more slowly, and that's raising some serious questions. Is this underperformance a warning sign? Or could it be a hidden opportunity that most traders are overlooking right now? Today, we're going to break all of that down in detail. We'll talk about price behavior, market structure, Bitcoin dominance, small cap volatility, macroeconomic pressure, and what all of this realistically means for Monad going forward. No hype, no panic, just straight logical analysis. So sit back, relax, and let's get into it. This is not financial advice. Please do your own research before making any decision. As we step into today's session, the broader crypto market is showing impressive strength. Many assets are pushing higher, some climbing by 5%, others by 7%, and a few even approaching double-digit gains. Sentiment across social media has started shifting toward optimism again, and traders who were hesitant just days ago are now starting to feel that familiar spark of excitement. But despite this overall strength, not every project is participating equally in this move. And that's exactly where Monad enters the discussion. While many coins are charging forward, Monad is noticeably lagging behind. Instead of surging with the rest of the market, it's moving sideways or even pulling back slightly. At first glance, that can feel discouraging, but in reality, this kind of behavior often tells a much deeper story. One of the most important factors to consider here is Monad's market capitalization. This is still a relatively low-cap project, and when an asset has a small market cap, the rules of the game change entirely. With a coin like this, it doesn't take billions of dollars to influence the price. In many cases, a few large players, sometimes referred to as whales, can create massive price swings with surprisingly small amounts of capital. Market makers can push price in either direction with very little resistance. This makes Monad far more sensitive to sudden moves compared to large cap assets like Bitcoin or Ethereum. At the moment, Monad is trading around 2.65 cents, showing a slight decline on the US dollar pair and a steeper drop when paired against Bitcoin. Market cap is hovering near $288 million, and 24-hour trading volume is sitting around $174 million, which is quite active relative to its size. These numbers tell us one thing very clearly. Monad is still in a highly volatile phase of its life cycle. One of the most overlooked but critical metrics in crypto is total value locked, or TVL. This measures how much actual capital is locked into the ecosystem through staking, liquidity pools, and DeFi protocols. It's one of the best ways to measure real user commitment, not speculation. Right now, Monad's TVL is sitting around $167 million. And here's the key issue. It is still failing to break into new all-time highs. That's important, because when price rises without TVL following it, that often signals that the move is being driven more by speculation than by genuine ecosystem growth. On the other hand, when TVL increases alongside price, that usually indicates strong, sustainable demand. So while price action grabs most of the attention, TVL quietly tells us what the smart money is really doing behind the scenes. And at the moment, Monad's TVL suggests hesitation rather than full confidence. This doesn't mean the project is doomed, but it does mean that caution is still required. Now let's shift our attention to something that influences the entire crypto market: Bitcoin dominance. For those who don't know, Bitcoin dominance measures how much of the total crypto market's value is held by Bitcoin alone. When dominance rises, money is flowing back into Bitcoin. When it falls, capital is rotating into altcoins. For several days now, Bitcoin dominance has been battling a key technical level that we've been discussing constantly. At one point, it briefly fell below this level, giving altcoins room to breathe. But as of Wednesday morning, dominance has climbed back up again to around 59.15%. That shift matters a lot. When Bitcoin dominance rises, altcoins almost always feel pressure. Liquidity gets pulled out of smaller projects and funneled back into Bitcoin. And this is exactly why we're seeing strength across the market overall, but weakness in certain altcoins like Monad. This tug of war between Bitcoin and altcoins is one of the most important cycles in crypto. If dominance continues to rise, altcoins will likely continue to struggle. But if it rolls over again, we could see another powerful wave of altcoin momentum. Today isn't just another random trading day, it's FOMC Day, one of the most influential macroeconomic events in the financial world. For those unfamiliar, the Federal Open Market Committee determines U.S. interest rate policy, and interest rates affect everything: stocks, bonds, housing, and yes, crypto. Markets have been pricing in a potential rate cut for days now. That expectation alone has helped fuel the recent bounce. But here's the truth that many traders forget: expectation and reality are not always the same thing. If the Fed confirms the rate cut, we could see another wave of bullish momentum sweep through crypto. But if the decision disappoints, markets could react violently to the downside. This is why we're currently seeing choppy price action. Traders are positioning themselves, but very few are willing to fully commit until the decision is official. Bitcoin recently pushed into a new monthly high, briefly trading near the mid-$94,000 region before pulling back. Even after that pullback, Bitcoin remains inside a very important technical zone near the zero point 0.5 Fibonacci retracement. This is a classic battle zone between bulls and bears. As long as Bitcoin holds above this level, the broader market still has a bullish foundation. But if Bitcoin loses this zone, we could see a sharp shakeout. And here's where Monad becomes extremely vulnerable. Because small cap coins react faster and harder to Bitcoin's moves. When Bitcoin sneezes, small caps often crash. When Bitcoin pushed into its recent high, Monad did react. The price surged and nearly touched the 3-cent level, a major psychological resistance zone. For a brief moment, momentum looked promising. In a short window, Monad jumped more than 11%. But that move didn't last. Almost as quickly as it climbed, the price fell right back down to where it started. That kind of behavior tells us something important. There is currently more selling pressure than sustained buying pressure. So why did this happen so fast? Because right after Bitcoin's move, dominance began rising again. Liquidity rotated back into Bitcoin, and Monad, being a small cap asset, lost support quickly. Since that local peak, Monad has pulled back roughly 9%, sliding from near 2.90 cents down toward the mid 2-cent range again. Now let's talk about the most critical level on Monad's chart right now, 250 cents. This zone has acted as a major support region throughout the recent accumulation phase. Since early December, price has repeatedly bounced from this range. Buyers have shown up here again and again. As long as Monad stays above 2.50 cents, the structure remains intact. But if this level breaks decisively, the next downside target opens up quickly, and that could send the price toward early December levels, representing a potential 15% downside move or more. For a small cap coin, that kind of drop doesn't require a major market crash. It could happen in a matter of hours if fear takes over. Let's consider a realistic downside scenario. If Bitcoin loses the zero point 0.5 Fibonacci level and drops toward $88,000, or even deeper toward $86,000, altcoins will feel immediate pain. And coins like Monad, with lower liquidity and smaller market caps, will likely experience amplified downside volatility. That doesn't mean Monad is a bad project. It simply means that its current structure makes it more sensitive to macro pressure. For the bullish scenario to regain control, one thing must happen clearly and decisively. Monad must break above 3 cents and hold above it. Not just wick above it, not just touch it for a few minutes, it must establish acceptance above that level. If that happens, it would signal that buyers have regained strength, and that a push toward the 3.30 cent zone, where price traded earlier in December, becomes realistic again. Until that happens, every bounce remains technically unconfirmed. Here's the part most traders struggle with: patience. Right now, Monad is in an accumulation range. It's not exploding upward, but it's also not collapsing. It's coiling, building pressure, letting market forces fight it out. These phases are boring, they're frustrating. They make people doubt their positions. But historically, this is exactly where long-term money is made. Not during the euphoric breakouts, but during the quiet consolidation periods when nobody is paying attention. Let's wrap everything up clearly and simply. Monad is currently underperforming the broader crypto market while many assets are posting strong gains. This weakness is directly tied to rising Bitcoin dominance, small cap volatility, FOMC uncertainty, lack of new TVL highs, strong resistance near 3 cents. The 2.50 cent level is the line in the sand. As long as this holds, the structure remains bullish neutral. A confirmed breakout above 3 cents is needed to unlock upside momentum toward 3.30 cents and beyond. If Bitcoin breaks down sharply, Monad could experience accelerated downside due to its low market cap. This is a market built on patience, discipline, and timing, not emotion. Thanks for watching. Hit like and subscribe for more daily crypto insights. Catch you in the next one. Stay crypto smart.